Welcome back to a look in the future. What would you do if you can go in the future and ask yourself questions? How do you grow your firm? How do you grow your practice? How do you transition into advisory services? Because we're all about that right now in 2020, advisory services. Well, luckily for us, we can just ask the time traveler himself, Paul Latham, and learn the knowledge we need at our firms today to evolve into advisory services and become the most relevant advisor to our clients. That's that key term that we've been talking about. Now, Paul brings three amazing things with him. Number one, he's built a successful accounting practice in the UK, so he understands us accountants. In fact, he's built his from an advisory powerhouse, which sold for $45 million in 2001. Number two, he's taken a business public, building it to a market value in excess of $400 million. So he really understands what business owners need and value and what we as accountants need to provide to them. And finally, most importantly, number three, we don't need to invent time travel. We can learn from the transition Paul made over 20 years ago in the UK when he figured out for himself how to do advisory services, his successes, his upsides, his downsides, all that stuff we get to learn from firsthand. I'm Garrett Wagner, as always, your entrepreneurial CPA channel host, and we've got Paul Latham beaming in here remotely from Hand Rock Solutions. Now, Paul, last time we had a great conversation talking about how proactivity works with their individual clients in the CIQ. So I thought, once again, let's pull the curtain back a little bit. Let's learn from your wisdom. I'd love to hear a little more kind of the thinking behind the CIQ process. Help people understand what it is and how they can use that with their clients.
Okay. Yep. Hi, Garrett. Well, delighted to do that. So just picking up from where we left off at the end of the last episode, as you say, in the last episode, we really talked about how important it was to properly position the CIQ with the client, as it says there, so the client understands why we're doing a CIQ, they've had the context explained to them, and critically, the advisor is leading the proactive process. And the goal of that first step was, to make proactivity feel real to the client and turn that intangible woolly word proactivity into something the client can actually feel and touch, and a tangible process. But then, similarly to as we did with the biz diagnostic a couple of episodes ago, today we're going to focus on the sort of more the specific detail of the CIQ diagnostic. And, as I always say on these episodes, anyone listening to this, you can create your own process to scale proactivity. I'm just taking you through how we do it. What this looks like today is not what it looked like at Latham's 25 years ago, but the principles are pretty similar. You can do your own stuff here. I'm just using this as a demonstration of how you can scale a proactive process. So first of all, CIQ diagnostics, some key points. First of all, the way we do it, it's online. And that makes it easy to complete. And in the first instance, we actually think the CPA should complete this together with the client. We think that's far and away the best approach, the CPA sitting with their client. But the fact that it's online also means a client can independently complete at home. Second key point is it's a process, so it's scalable. And the third key point is the fact that it's online and a process is sort of turning it into a tangible thing. And that brings elements of that value proposition that we've talked about in previous episodes to life. It's almost so that you can touch it. It seems real. This is what we mean by proactivity. This is what we mean by expert zone. This is what we mean by the virtual team. Okay, so then in terms of the process, I'm just going to give you a bit of an overview. And basically the way we do it anyway has 16 steps. We're going to go through this in a bit more detail, but we need to know about your personal information, if you like, your standing data, the money you made last year, what do you think is going to happen in the next 2 or 3 years, what's your net worth, pensions and investment assets, life insurance, wills and trust planning, any other personal services that interest you, and then, if applicable, business interests, again, standing data, what's going to happen in the next 3 years, business value, and various sort of potential for business interests or business strategy, any other concerns. So what I'm going to do is take you as briefly as possible through the 16 steps involved. And what I'm going to also show here is what does the accountant do and what does the client do? And I go back to a previous episode where I sort of said, I think my mum used to say, more haste, less speed. This is another good reason for not just going through that presentation, but the accountant also doing a little bit of preparation before the client gets to the CIQ. So taking you through the steps, step one, personal information, name, date of birth, marital status, spouse's name, kids' names, and you can click on buttons and fill all these things in. But as it says on the screen there, I strongly recommend that the CPA pre-populates this. And then as you're going through it with the client, obviously you can update for any family changes. They've got divorced this year or whatever. But let's not waste time for the client by going through stuff that the CPA already knows. Similarly, when it comes to household income last year, salary, business income, other income, and so on, 99% of CPAs already have that information, and 99% of clients won't remember that information. So it makes a ton of sense for the CPA to pre-populate that. So steps 1 and 2, there the client isn't even going to touch. They'll look at it, but they won't touch it. Then we're just simply asking them, so what do you think is going to happen in the next 3 years? Is your income going to go up? Is it going to go down? Is it going to stay the same? So you're getting information, what does the client think? It takes 10 seconds to answer, maybe a few more seconds to capture why they think it's going to go up or down. Similarly, things like personal net worth. Again, maybe you have to go through this with the client the first time. Maybe the accountant already knows much of it, but once it's done, it becomes standing data, values of real estate and commercial real estate and cash and such like. But really what you're interested in from the client is any changes happening in terms of your personal net worth. Are you thinking of selling any personal assets in the next 12 months? And obviously this allows you to then begin to think about various aspects of tax planning. I'm not going to go through all the sections, but that same sort of approach of the CPA filling in what they already know and really asking the client, are there any changes or anything particularly going to happen? So when it comes to pensions, life insurance, wills and trust planning, that's going to happen in sections 5, 6 or 7. I've not detailed them here. And then you get an opportunity in question 8 that sort of says to the client, what about some more general stuff? Does any of this stuff interest you? And by the way, this particular part of the questionnaire goes right back to Latham's in the 1990s, because when new clients came in, they all filled in something like this. And I used to say to clients, there's only really 3, well, first of all, I'd say we're a great big supermarket full of tax planning and so on stuff. You've just got to give me a clue which aisles you're interested in. And there are only 3 scenarios. Yes, you are interested. No, you're not. Never talk to me about it. Or maybe you will be at some point in the future. Just give me a clue. And if you are maybe interested, we can also agree, when you want me to talk about it. Is it in 3 months or 6 months or 9 months? And basically all that's happening here is the client is deciding, am I interested in advanced tax planning or personal asset protection or whatever it may be, social security, maximisation, college planning or whatever. And it's a very basic customer relationship management model. And all we're doing is we're letting the client guide us as to where they're interested in stuff. And by the way, if they have no business, that's the end of the CIQ, up to question 8. From 9 onwards, it only applies if you actually have a business. And again, we're setting up business types and state formed and all that sort of detail that the accountant's going to know and the client is not going to know off the top of their head. So strongly advise it's pre-populated by the CPA. Similarly, last year's revenue, last year's profit, last year's tax liability, the client isn't going to remember, but the CPA will pre-populate it. All we're doing is asking the client, what's going to happen? What do you think is happening in the future? Do we feel optimistic? Is income growing or is it going down or is it staying the same? And if so, why? Tell us a little bit more. And then next sort of questions, it's all about business value. You can begin to start talking about business value that takes you maybe to start talking about sale or succession strategy. It's an opportunity to begin to have a dialogue with your client that you don't normally have. Next section, we're asking questions about, for example, what employees, do we have buy-sell agreements? What about pension planning? More CRM questions here. What about tax? What about growing your business? Do you have concerns about health coverage? What about risks and so on? Various strategic areas. Anything else? And you know, if the client gets to this CIQ where the CPA has done their job and pre-populated, this part of it, you know, you would struggle to spend more than 20 minutes on. And basically, where we get to at that point, having completed the CIQ, in the same way that the biz diagnostic has an algorithm, the CIQ has an algorithm, and it's based on the CPA data that they put in, the profits, the income, the values, and the client answers. Essentially, the algorithm will iterate and say, well, based on this income, based on these, this net worth, and so on, these are things that you ought to consider. It's called an opportunities report, but basically, it creates or identifies potential planning solutions that a client should consider. And then really all that has to happen is that the client says which ones matter most to them and prioritize their needs. So if we go back to that 5-step planning process that I taught you through in the previous episode, at this point we're in map 1, prioritizing needs. We're looking specifically at the opportunity report that's coming out of the CIQ and beginning to prioritize those CIQ opportunities. I've got one up on the screen here. And you can see here, first of all, there's a lot of detail behind this opportunity report. This is just a summary. And the other thing to say here is this particular one was a dummy case. I just happened to print out for the purposes of this video. It's got way more opportunities than you'd probably have in a normal case. But we probably see, typically when we've had literally hundreds of these completed, we normally see that the average client produces about 10 opportunities from a CIQ. And 10 is more than any client will want to tackle at any one time. So what we need to do is begin to establish from those, let's say, 10 opportunities that they've identified, what are their proactive priorities. And that takes us to a next step, which is really simple. Each of that list of opportunities, we essentially sit down with the client and say, basically, you've got 3 choices. Are you going to drop that priority? Are you going to park it? Or do you want to prioritize it? And there's a little space here for you to make some notes if you want to. And, chances are they may drop the odd thing, but what will normally come out of that process is they'll identify or prioritize maybe 2, possibly 3 of those 10 opportunities that they identified, and we'll park the other 7 or 8. And the great thing about parking them means that you don't forget about them and you come back to the client at another time. But once you've prioritized those 2 or 3, that's when you can then begin to create a plan, and you go back to that sort of 1 to 5 structure that I talked through in the last episode. So we've now identified the potential needs. That's the completion of map 1. Having identified those 2 or 3 things, we're going to have an exploratory discussion with the right expert, make sure they're the right fit. Do they need any more information? Map 3. What sort of options and solutions are that we can talk through to the client? Map 4. And if we get to the end, plan implementation. So essentially, what this advisor is now going to do, and I'm not going to talk you through it again, is now having established priorities, take the client through map 2 to 5, and we're still back at where we began. The client's understanding why we're doing this. They're understanding that we can't be proactive without giving them some help. We've explained the context. We're leading the process. Proactivity feels real. We've taken that woolly, intangible word proactivity and turned it into a tangible process. But the key to this, it's incredibly scalable. I was talking to you before the episode, Garrett, about just one advisor who came to mind, who's he set up camp outside his CPA's office, and between them, as every client is coming in doing their tax return stuff, they're also going through the CIQ, and it's become a machine. And that's the whole point. Scalable process, proactivity becomes real.
Yeah, and that's what it is. How do we master advisory services? We got to make it scalable. We got to make it real. It can't just be one person kind of just throwing it out there and doing it like we talk about so much. There's got to be a structured, systematic process to make these things happen. And this is what you got to do. Don't try and create yourselves. Don't mess around with it. Follow the process, and you'll be amazed how easily it works for you.
Yeah. Well, put it this way, it's a lot easier than trying to invent a new process, because I can tell you what, that's quite a hard thing to do.
Yes, Paul, you would know firsthand how many years you spent creating
Yeah.
that process.
And back in the 1990s, I mean, we created one. We had a firm of 250 plus people. We didn't have the internet in those days, or not barely anyway. Imagine how hard it was in those days to create a process, but we couldn't have done it without the process.
Yeah, and I was just thinking as you were saying that technology now allows us to function so much more smoothly.
Yeah.
And I've seen a lot of other advisory software out there that's still, paper checklist or like an Excel worksheet. That stuff's time and past. Like, you want to use the technology that exists today. Use the thing called the internet. Use algorithms to make educated assumptions and make proactivity real. That's what technology does more than anything else.
Yeah, correct.
So everyone, thank you for watching. Paul, thank you for sharing this insight and on how the thought process behind the CIQ and how you can make proactivity real with your individual tax clients. Now, if you want to know how ready you are for the future, how ready you are to give advisory services, take a minute and sign up for the Biz Survey. There's a link below. See where you stand today. We've talked about it in prior episodes. You know what I'm talking about. See what your score looks like, how ready you are for future success. Don't forget, you can click the link up there, subscribe to the YouTube channel, stay up to date. And as always, we challenge you today to take action to change the world and invest in yourself.